So did you know that the interest you get on your tax refund is also taxable? Hi everyone, welcome back to my channel. I am CA Isha Jaiswal and today we are going to talk about something super important. It's regarding filing your income tax return or ITRs for the financial year. The due date is fast approaching. It's 31st July, right? Remember the date? So filing your ITR can be easy or stressful. It all depends on how you're prepared for it. So let's make it easy by going through some of the common mistakes which people make and how to avoid them. Ready? So let's dive into it. First things first. You might be thinking, why is it actually so crucial to avoid mistakes when you're filing your ITR? Well, errors can lead to penalties, delays in refunds, and even land you in legal trouble. So let's get it right the first time. One of the most common mistakes is using the wrong ITR form. Every person has to report all their income sources correctly. If you choose the wrong form, your return could be marked as defective or even invalid. I've also uploaded a video on which form to select depending on what type of income you earn. So don't forget to check out that. Always double check your PAN, Aadhaar and address details. The income tax department will send notices to the address you provide. If it's wrong, you might miss some important communications. Also ensure your email and phone numbers are correct to avoid any issues with receiving notifications or refunds. Next, make sure you enter the correct bank account number and IFSC code. Incorrect details can delay your refund. Also remember to report all your bank accounts held during the year, not just one where you want your refund. Next, many people forget to report interest income from savings accounts and fixed deposits. If your savings account interest exceeds Rs 10,000 annually, it's taxable, guys. Report this under income from other sources and then claim the deduction under Section 80 TTA if you are below 60 years. For senior citizen, the deduction is up to Rs 50,000 under Section 80 TTB. Next, if you have switched jobs during the year, make sure to report income from both your old and new employers. Failing to do so can cause discrepancies in your TDS certificates and Form 26AS, leading to complications. Next, Form 26AS shows the TDS deducted in your name. Always cross-check this with your records. Any mismatch can result in lesser refunds or even notices from the tax department. Next, review your bank statements to ensure you have included all the income, including the gifts and interest received. Mention all operative bank accounts accurately to avoid this issue. Moving on to the next mistake. Even if some income is exempt from tax, it should still be reported. For example, like dividend income from shares and mutual funds or gains from selling a house under Section 54. Always disclose these properly to avoid income tax notices. So did you know that the interest you get on your tax refund is also taxable? Make sure to report this under income from other sources. After filing your return, you need to verify it within 30 days. You can do so online using your Aadhaar OTP or other methods. If you don't, your return won't be processed and it will be considered invalid. Next, if your minor child has any income, it needs to be clubbed with your own and taxed accordingly. For example, interest from an FD in your child's name should be reported in your ITR. Moving on to the next topic. Filing your ITR late can lead to penalties and loss of certain rights, like carrying forward losses. It also delays refunds, so always file on time. Next, keep all records of expenses and investment you claim as deductions. The tax department can ask you for proof up to 6 years after you file your return. Moving on to the next topic, if you own multiple properties, only 2 can be considered self-occupied. The rest will be deemed let out and you will be taxed on notional rent. Make sure to report this correctly. Even if your income is below the taxable limit, you must file an ITR if you own assets abroad. This includes bank accounts also. Not doing so can bring notices from the tax department. For this, I have already made a video on when you must need to file an ITR. Don't forget to check it out. If your tax liability exceeds Rs 10,000 in a year, you must pay your advance tax. This applies to rental income, interest and other earnings. Pay on time to avoid interest and penalties. When you switch units in mutual funds, report any gain or losses. These transactions often don't show in the bank statement, so don't forget to include them in your ITR. Next, never submit fake bills to claim deductions. The income tax department can easily verify these and may penalize you for these all frauds. Next, make sure your PAN is linked to your bank accounts to ensure smooth processing of refunds. Certain exemptions need specific forms. For example, to claim relief for salary arrears, you need to submit Form 10E. Always check which forms are required and submit them on time. Next, determine your residential status correctly. It affects how your income is taxed. Residents are taxed on global income while non-residents are taxed only on Indian income. Next, be very careful with your deductions. Some donations are fully allowed while others are only partial deductible. Make sure you claim correctly to avoid scrutiny. So these were some of the common mistakes which people make while filing their ITR. Avoiding these can save you from a lot of trouble and ensure a smooth tax filing process. Remember, it's always better to be cautious and accurate. Thank you guys for watching the video till the end. If you found this video helpful, please give it a thumbs up and subscribe to my channel for more such content. And if you have any questions, drop them in the comments below. Happy filing guys, and see you in the next video.